China is accusing the United States of stealing $40 billion worth of Bitcoin from a Chinese entity, and we've got a lot of other big news to cover today. JP Morgan just launched its JPM Coin on a public blockchain. We'll also talk about Visa and the adoption of stablecoins, plus a new solution that makes it easier for users to accept payment in stablecoins. There's really a lot to unpack today. Welcome back to CryptoRed, your go-to channel for crypto news. Let's start with Bitcoin price. BTC is at $105,000. Ether is at $3,480. Now, let's jump straight into the news. First, the US government shutdown seems to be coming to an end. Democrats and Republicans are reportedly close to reaching an agreement, which is something markets were eagerly waiting for. There were a lot of uncertainty around what this shutdown might mean for the economy, so it's definitely a good thing that it's wrapping up. Next, the spot XRP ETF is expecting to launch in the United States either today or tomorrow. So that's coming very soon. We're also seeing a spot Chainlink ETF from Bitwise making progress. The DTCC, the Depository Trust and Clearing Corporation, has officially listed it under the ticker CLNK. That's an essential step before it can start trading. So again, we're clearly seeing the wave of altcoin ETF hitting the US market. We've already seen the Solana ETF launch successfully, especially with its staking components, and now there's just an explosion of institutional adoption and crypto ETF activity across the board. And here's another surprising piece of news. The Swiss National Bank reportedly holds around $200 million worth of BTC exposure indirectly through MicroStrategy, according to data shared by the Big Well. It has multiplied its exposure to strategy, now holding about 750,000 shares, valued at around 300 million as of June 2025, but now it's only $200 million. What's fascinating is that the investment came before strategy was added to stock indices, the different indices that group major companies, which shows that the Swiss National Bank clear intent to gain Bitcoin exposure. It was not a passive investment. The only question is, why didn't they just buy a Bitcoin ETF instead? We don't have the full details. Maybe it's more convenient this way. Maybe simply because it's just like stock of a company. They already own stocks of companies. Either way, it's a strong signal. We're now seeing central banks starting to accumulate Bitcoin, even if it's indirect exposure. Sure, it's a bit riskier than buying an ETF, but still, it's a big deal. And it doesn't stop here. Look, SoFi, one of the biggest banks in the United States, apparently the only one with the federal charter that allow it to operate nationwide, has just launched crypto trading. It's the only one that launched crypto trading and has this federal charter. So that's a good news. SoFi will start by offering Bitcoin and Ether trading and also some other cryptocurrencies. And they also launched their own stablecoin. It's the same pattern we've seen everywhere. Everyone wants their own stablecoin now. So adoption is accelerating. Banks, institutions, payment companies, everyone's moving into crypto. And we'll talk more about that in a moment, especially about the JP Morgan, Visa, and also with China and the United States. I told you earlier, we'll talk about JP Morgan, and here we are. JP Morgan just launched its JPM Coin. Yes, JP Morgan actually launched its own crypto, its own coin. So what is it exactly? It's what we call a deposit token. A deposit token is basically a token that represents bank deposits, meaning deposits held at JP Morgan. It's available for institutional clients, and it's been launched on a public blockchain. Specifically, it's been launched on Base, the layer 2 built on Ethereum. That's honestly really good news, seeing this kind of major entities moving to public blockchain. We saw it recently with Western Union, which chose Solana, and now we see JP Morgan choosing Base. That's a big deal because until recently, institutions kept saying things like, the interesting part isn't crypto itself, it's the blockchain technology. We can do everything we need with private blockchain. And now we're watching the same institution migrate to public blockchain. They even said that while they're starting with Base, the L2, they plan to expand to other blockchains later on. This really reminds me of what Western Union did, their exclusive temporary agreement with Solana. I actually think Coinbase probably paid JP Morgan a few $1 million to have them launch JPM Coin exclusively on Base. We'll see later which chains they expand to, probably wherever there's liquidity, DeFi activity and users. So I hope it's going to go on Ethereum and Solana. At the end of the day, what matters is in the increasing number of institutions tokens on public blockchain, because that's what will drive more use cases. Institutions will start borrowing against those tokens. They'll develop new financial products, and that will help grow decentralized finance overall. Now, just to be clear, the JPM coin requires KYC. It's for institutions only, not for the general public. So yes, it's kind of like a stablecoin, but it's not accessible to everyone. We're also seeing banks trying to compete with stablecoins, claiming their own products are safer because they come with bank guarantees. Plus, in theory, JP Morgan can directly offer yield on its token, whereas stablecoin issuers can pay yield directly. They usually go through intermediaries to do that. For instance, Circle, which issues USDC, can't legally pay yield on it, but Coinbase, which distributes USDC, can offer yield to its users. Anyway, another institution that keeps adopting crypto and stablecoin is Visa. Visa just announced a new program in the US that lets people get paid in stablecoin. It's for users of the Visa Direct platform. Basically, it's a solution that allows people to receive payment in USDC. I'm not sure if it stays in USDC or it gets converted afterwards into dollars, but either way, it's a great step forward. The goal is to make it easier for freelancers and digital creators to get paid in stablecoins. That's really concrete use case. Honestly, I know it's actually super easy to get paid in USDC. It's even better than getting paid by credit card or Stripe or whatever. When you're paid by card, you end up paying fees on the website and platforms, and those fees are usually higher than if you just accept USDC and sell it on exchange with low cost, for example, Binance. It really costs you less, depending of the extent, like I said, but overall, it's a very interesting solution. Now, let's talk about the hacking story, the one involving the United States and China. China has just accused the United States of stealing $13 billion worth of Bitcoin from a Chinese entity. The accusation comes directly from China's cybersecurity agency. It's an official statement, and they're referring to the BTC that was stolen from the Lubian mining pool, which was a Bitcoin mining pool. The hack happened back in 2020, but what we've just learned recently that it was apparently the United States behind it. According to China, according to the United States, the person running Lubian was involved in money laundering and had stolen large amounts of crypto through social engineering attacks, things like pig butchering scams and other emotional scams where people are manipulating it to sending money. This person was allegedly laundering the stolen funds through that mining pool, so the United States decided to seize all the assets. It's not exactly clear how the seizure actually happened, how the 127,000 Bitcoin were taken, but now there's an official statement saying clearly that the United States was behind it, according to China. This comes in a pretty tense geopolitical context, with China and the United States constantly accusing each other of hacking. And honestly, I think both sides are doing it. They've been hacking each other for years now. It's not necessarily related to crypto. It's usually more about accessing confidential information, hacking exchange servers, Microsoft servers, and so on. Those things happen all the time. But this time, this case really stands out. I think it's the first time we see the United States stealing over $10 billion from an entity. Of course, each side has its justification. The US, I think, the US has this broader goal of building a Bitcoin reserve. And they've even stated that the BTC they seize will not be sold. So that means those Bitcoin are effectively contributing to the US own Bitcoin reserve. We're still waiting for the final version of the law about that reserve. It hasn't been released yet. Anyway, I found this story pretty mind-blowing. You rarely see something like this happen in crypto, and the amount was actually even higher, around $14.5 billion, because a few months ago BTC was worth more. Back in 2020, it was of course lower. It was like $127,000 were worth a lot less, but that's still a massive amount. Just to give you an idea, MicroStrategy holds a few 100,000 of BTC, so we're talking about an enormous sum. And if BTC keeps growing, we could see easily this amount represent 30 or 40 billion dollars. Now, moving on, there's a competitor to Hyperliquid called Lighter that just raised $68 million from investors like Coinbase and Robinhood. Lighter is an L2 on Ethereum. I already talked about it before. Their airdrop also is coming soon. They've set up a point system now where you can earn points by trading on Lighter. They're currently valued at around $1.5 billion, which shows just how much interest there is now in these perpetual DEX projects. You know, all the competitors of Hyperliquid, where you can trade with leverage on perpetuals. There are a lot of them. We have Hyperliquid, of course, but also many others like DYDX. We also have Paradex, Lighter, and Aventis, and a lot more. Right now, a lot of people are farming these perpetual DEXs, hoping for a massive airdrop that could happen soon. The biggest one, obviously, is Hyperliquid, but we still don't have any details about the next airdrop. They have so many tokens left to distribute that a lot of people are convinced it's only a matter of time before it happens and it will be huge. Honestly, I don't think it will be as huge as the season one. During season one, nobody was expecting such a massive airdrop. Some people received hundreds of thousands of dollars worth of tokens, and those who held instead of selling saw their value explode because Hyperliquid tokens skyrocket afterwards. As for Lighter, it's really well positioned. It uses zero-knowledge technology. It's a layer 2 ZK rollup built on Ethereum, so it benefits from Ethereum security that gives it additional guarantees compared to Hyperliquid. Its performance is amazing. There's a huge number of transactions per second. There are some very big investors back in the project. And finally, ZCash. ZCash, the project that's been making a lot of noise lately and really taking off, just surpassed 23% of its total supply being shielded. What does shielded supply mean? It's the amount of ZCash that's in a pool where transactions are actually private. By default, Zcash transactions aren't encrypted. They're public, just like Bitcoin. But if you want to make confidential transaction, you have to shield your Zcash, meaning you're protected. Once your coins are in that shielded pool, you can send private transactions to someone else completely untraceable, similar to what Tornado Cash or Railgun does. But the difference is that here it's built directly into the Layer 1 protocol. That's really interesting, and it's so good to see that this number is growing. The price of Zcash is rising, of course. Over the last few weeks, it was just incredible. But so is the amount of shielded Zcash, and that's a very good sign. It shows that more and more people are interested in the core feature of Zcash, protecting the privacy of your transaction, your transfer, your exchanges. So it's really good. That's it for today's crypto updates. I hope you enjoyed the content. If you did, don't forget to like, comment, and subscribe. Bye-bye.